Hey everyone, welcome back to Alpha Insights. I'm Jeff, and we're glad you're with us.
And I'm Ryan. We've got a lot to unpack on cannabis policy and what it means for investors today. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
All right, quick snapshot. Today's session is all about state-level moves that are already reshaping risk and opportunity in the cannabis sector. The headlines came fast, the market reacted, and a few names and ETFs tracked the flows. So Ryan, where do you want to start?
Let's start with Virginia. Big political action there that could actually change legal risk for people and operators on the ground.
Right. Two measures went to the governor. One builds a resentencing pathway for people still under supervision for old marijuana convictions, and the other adds protections for parents who use cannabis lawfully. If the governor signs them, that's not just symbolic.
Exactly. It could reduce criminal justice exposure and give more clarity around employment and family law issues for consumers and workers. That clarity tends to boost consumer confidence, and that matters to local retail sales.
And from an investor perspective, clarity is liquidity. But the real question here is implementation, when courts and regulators actually act. Those timelines are what move the stock level risk, not simply the signature itself.
Watch the regulator comments after any signing. Implementation details can be slow, and they can create mini catalysts or delays for local operators.
Okay, shifting gears. Texas made some mixed moves that are worth dissecting.
They cut hemp licensing fees, which advocates liked because it lowers the barrier to entry, but at the same time, they tightened the total THC limit pretty strictly.
That's a classic double-edged sword. Lower fees make it cheaper to get in, but stricter total THC limits could wipe out a lot of current formulations. So companies either reformulate or pull SKUs, and neither is free.
Right, and that spells inventory risk and margin pressure for producers who chose to stay. Expect fragmentation in the Texas supply chain as players decide whether to adapt or exit.
So the next thing to watch is Texas's enforcement guidance from the Department of State Health Services. That guidance will tell us whether the rules are enforced in a way that's immediately disruptive or whether there's a grace period.
When that guidance drops, you'll be able to model which companies can adapt without huge reformulation costs.
Meanwhile, Oregon gave edible makers a break. A proposed cap on THC per edible didn't pass, so that removes one near-term headwind for edible manufacturers.
Good news for producers who rely on higher dose formats. But don't forget the smaller regulatory nudges, like in Michigan, where regulators are steering marketing language away from the word dispensary toward provisioning center.
Little things like that matter. Packaging, labeling, even a single phrase can change compliance costs and shelf visibility. So it's granular, but it adds up.
Politics also showed up in the headlines. Elected officials and executives with cannabis ties are still lightning rods. Those stories keep political risk front and center heading into 2026.
Totally. Okay, quick market color. Trading was headline-driven today. Lots of flows into the sector ETFs that retail investors watch, and analysts flag specific multi-state operators.
Right. Keep an eye on the MSOS ETF and TCNNF ETF for flow signals. And on the company side, people mentioned Green Thumb Industries, Curaleaf, and Tilray a lot, because they straddle U.S. and Canadian retail channels.
Tilray keeps showing up in conversations around labeling and retail strategy. When regulators nudge packaging rules, it's firms with big retail footprints that feel it first.
So how should listeners position? If you run a small, concentrated portfolio, focus on companies with robust compliance programs and diversified state exposure. Or use an ETF to spread that policy risk while you wait for clarity.
And be ready for volatility. Policy headlines can move prices quickly, sometimes before fundamentals catch up. So risk management matters. Stop losses, position sizing, and having a time horizon for implementation news.
Quick reactions?
Fragmentation in Texas.
Edibles relieved in Oregon.
And Virginia could be a net positive if implemented cleanly.
Short and sweet. Okay, before we wrap, 3 things to watch this week. Whether the Virginia bills get signed and how implementation is described. The Texas enforcement guidance on total THC. and any state-level labeling or product cap updates that can shift shelf economics.
To summarize, state policy, not macro alone, is driving cannabis volatility right now. Virginia's moves could reduce risk if they're implemented effectively. Texas shows how a rule can both lower entry costs and tighten standards. And Oregon's outcome clears a path for edible makers in the near term.
So stay selective. Expect headlines to trigger trading, and watch the governor's desk and regulatory guidance closely.
Got questions? We'd love to hear from you. Head over to stockalpha.ai, where you can ask us anything and we'll answer live. And while you're there, check out more market content.
Thanks for listening. We'll keep tracking these stories and bring you the market takeaways as they develop.